Hey, it's Andrew Paul, branch manager with Benchmark Mortgage, and I want to bring you a very important update as it pertains to the market and interest rates and what you can look for as we go in towards the summer months. 2 Fridays ago, the jobs numbers came out and they were a lot stronger than expected. Hey, that's great news for the economy, but not so good for interest rates, and here's why. With the job numbers coming out stronger than expected, it's all but foregone conclusion now that the economy really has turned around. Unemployment rate has dropped, and things are really turning around in America. Globally, the economies aren't doing so well, but America is doing pretty well. So what that means is that the Federal Reserve, who has held short-term interest rates low for so many years, is going to be in a position here now sooner rather than later to make adjustments to short-term rates. Many people believe that come June, the Federal Reserve will begin to raise short-term interest rates, and that will also affect mortgage rates. What you need to know is, how does rising interest rates affect mortgages and your buying power? So let's look at a quick example side by side to understand how an interest rate going from 4% to 5% can affect your buying power and monthly payment. So let's assume for a moment a $450,000 purchase price with 20% down and a 4% interest rate. Your monthly mortgage payment would be $2,262 a month. Now, what happens if that rate goes from 4% to 5%? Well, your payment's going to go up to $2,476 a month. Now, in this example, I'm assuming principal, interest, taxes, and insurance as well. But the bottom line is a 4% to 5% move is going to increase your total payment by a little over $200 a month. Now, let's assume for a moment that you qualified maximum for $450,000 purchase price with 20% down, and that payment, that $2,262 a month payment, is the most that you qualify for. Well, what happens to your buying power when the rate goes from 4 to 5%? How do we keep your total payment at that same $2,262 a month? Well, now at 5%, the max purchase price would be $410,000. So a $410,000 purchase price with 20% down and a 5% interest rate for principal, interest, taxes, and insurance would also be $2,262 a month. So a rise in rates from 4% to 5% in this example affects your buying power by as much as $40,000. So that's an important thing to know. If you're in the market right now to buy, strike early rather than later, because you can see how this rise in rates could affect your buying power. If you're thinking about waiting to save up for a down payment, well, you might need to save more money than you thought, because rising rates are going to still eat into that buying power. All right, so that's what you need to know. Look at the Federal Reserve and what they may do coming weeks and into June, as they very well may raise short-term rates, and this will affect buying power and monthly mortgage payments. Well, for other information like this, give me a call anytime. I love looking at the economy and really understanding and being able to articulate to my clients and referral partners what's going on in the economy and how it relates to the real estate market. Call me anytime, and I look forward to speaking with you.